Hello traders, and welcome to another video of this diary. And today we're going to talk about why your support and resistance levels fail and how to go about fixing that issue. You may find that when you do draw support and resistance levels, they don't work out, and today we'll go over why that is and how to avoid that problem. So here is what we're going to cover in this video. We're going to go over how to actually trade them with accuracy, and the main points to know here are that the levels are created for retail traders by the liquidity providers, and then they are manipulated at those levels, and we will go over that and we'll look at how that's done, and then we will cover the fact that you need to avoid those obvious levels, and it's all fractal, and the fact that you can expect a stop hunt to happen at these levels and where you will enter in order to improve your accuracy and use those support and resistance levels better to improve your trade and not get caught out. So let's begin and look at the overall concept of the failed support and resistance levels. So let's say here that we have a trending market. We've identified that we want to sell this market, and we can see that here we have a market that begins to range, and we begin to have a defined level of support turned resistance, and we mark that level, and we expect that what will happen is we will have another bounce on that resistance level, and we will expect price to come down and to respect this level. However, what's actually happening here, and why does the market not do this? Why does the market not head straight down each time? It may have moved down the first time, it may have the second time, but let's say that you arrived at the market at this point in time and you expect the market to do the same thing. So what's happening is that many traders are seeing this level. They're seeing these key points, and all of them are trying to do the same thing. Many traders around the world doing a similar thing. What does that mean? That means that many people are placing their sell orders around about this level, and they're placing their stop loss above. So each time, the first time, traders have entered here and placed the stop loss above, entered here, placed the stop loss above, or perhaps a little higher. But each time, what we have is an accumulation of orders. Each time, each trader expects the market to move in their direction lower, but the market doesn't do that. The market instead comes back, touches their resistance level again, and touches it again. So in fact, what we have going on here is a collection of orders of stop losses above this level. And what does that mean? Well, let's move in a bit closer. And what we can see is that in fact what's happening here is that the liquidity provider, or the market maker as it's called, has created this level using an algorithm. And what happens from here is that this level is drawn in. It's bounced off the so-called support resistance level so that traders can see it in an obvious way. And that draws traders in, and this creates liquidity. This creates a build-up of orders and stop losses. And what will happen inevitably is that once this support resistance level becomes very clear and very obvious, most of the time the market will not continue in this direction. It will actually stop hunt this level and take out all of these stop losses, taking out the liquidity, the money, and all those orders. Therefore, it's not a good idea to trade with the support and resistance level. And the market, once it has done that, what will happen is, many times over, it will create another support resistance level. So now we will have this as support, and the market will come down, bounce off, will create another fake point of support and resistance, at which point the market will then start to sell off in its intended direction. And at this point, all of these traders, if you were trading short each time, you would be taken out. And again, the traders that placed their buy here based on support resistance principle again will also be taken out, because their stop losses were below and their take profit was above, and they would have been in the buy. Therefore, the best time to wait would be after all of this has happened, at this point right here. And this is where you will be clicking to sell and go down. So how do we fix this problem? We simply wait. We simply apply more patience and completely avoid all of these obvious areas. We do not go for these obvious areas, because they are very obvious to all traders, and once they become too obvious, it is very clear what everybody is doing. We simply wait for the stop hunt, we wait for the market to manipulate, and then we can sell. Then we can click and go down, and that is where the trade will be. And this happens on all time frames because it's a fractal market. So now let's go over and look at it in an example on the chart. So here we have an example of the Aussie dollar. We can see that according to our trade direction, intended direction, we are intending on selling. Perhaps we've got our EMAs, we have a trend. So now let's just clear up the EMAs and just look at what's happening. So here I will just place in our indicators, we will just place a line to show the start of the day. So perhaps we began somewhere around here to look for a setup. So we know that our intended direction is short. Therefore, we are looking for that short. And here we can see an obvious level of support and resistance. So here was the support turned resistance, resistance, resistance again. And what we can see is we can see the same thing happening again and again. We have the upside down pin bar here, we have another one here, and we have another one here. And each time what's happened, the market has moved down and come back up, moved down and come back up. It has not gone in the intended direction for traders. And what we can see is right about here on London Open, we can see that the market has pinned this level one more time, the support resistance level. And if we just move this line away so we can see what's happening, this is on the 15-minute time frame. We can zoom down into the 5-minute and we can see what's happening. So once again, we have another very weak candle to draw in more traders. So therefore we can now estimate that the stop losses are somewhere above in this area. And now we can expect the market to run through that area, which happens here. And once it's run through that area and comes back into that area and creates another support and resistance level, which is actually just a dummy level, we can expect that we're going to have a run on all those stops and we're going to continue down. So when we see that happen, now we can see that the market has in fact at this point taken out those stops, and this is where we are going to click the trade down, and we can expect the market to run lower. And in fact, that is when the true trend direction continues and the market runs without looking back. And here we will have, by the end of the day, our profit. And just to show you the fact that it is fractal, we can see here on the daily chart that again the market has created a level here. The market has run through the level, ran the stops, and then reversed very sharply, and we can see that the market then went very quickly down. And this is a daily chart, so it appears all the time and it happens again and again. Just remember to spot the very obvious support and resistance levels where there's been many occasions that the market has respected that and expect to run on that level and then a reversal. So that's how you trade support resistance levels with more accuracy, simply by waiting for the right moment and waiting for the stop hunt to happen before entering the market. It just takes a bit more patience and takes more discipline to observe that happen and let it happen without taking part in the market until you're ready to trade. So thanks very much, and good luck in trading.